Good morning. It is Thursday, March 21st, and I was just going off about Robinhood. It's not a good, it's a good trading platform, not a good brokerage. Even Webull, who I tell you guys to go to on my Linktree and open up an account, fantastic trading platform, fantastic app. It is not a brokerage house. Make sure that if you have retirement funds, if you have enough things, Diane was just talking about how her son was trying to get fractional shares of an ETF in Schwab, and they wouldn't allow fractional shares. Fidelity, I don't think you have any problem buying fractional shares in Fidelity. If you want to hook up with Fidelity, just let me know. Email me. Go over to my Linktree and just email me and say, hey, I got a bunch of money that I want to move to Fidelity. I'll send you over to my guy, Stuart. I got a guy. I'm from Jersey. I got a guy. Talked yesterday with Steve Kress. God, this guy is so good. I put this little clip. It's a 1-minute clip on Steve talking about SMCI. Steve from Seeking Alpha. We talked about more than just alpha picks. He is the head of quantitative strategy for Seeking Alpha. So if you go to Seeking Alpha and you look up, let's just look up Apple, for instance. Let's look at Apple, because if you go over here and you have the premium, there's what's called a quant score. And then you see the factor grades. Steve explained to me, like an absolute artist, how to use these factor grades and what you want to look for in a stock. Went over NVDA versus SMCI. We went over why NVIDIA is not in the Alpha Picks portfolio. So remember, there are two services for Seeking Alpha. There is Seeking Alpha Premium, which I provide you a $50 off coupon on my Linktree, linktr.ee/dailystockpick. It's the second link. This gets you access to all of this stuff, the rating summary, the factor grades, all the news story, all the analysis. It gets you everything like that. Some people don't want to analyze their own stocks. They don't want to import their own portfolio and have it grade their stocks. Some people just want 2 stocks a month. That's where Alpha Picks comes in. And that's the third link on my Linktree, Alpha Picks, if you want to beat the S&P. Because look at their performance, 105% versus 32% on the S&P during that time period. It is 2 stock picks a month. We went over how they factor them to buy, how they factor them to sell. You get access to all 20 stocks on day one. Stocks cover multiple sectors. The performance is just unbelievable. How it works. We go over everything with Steve and everything that you want. And again, you get a $50 off coupon if you use my Linktree. So that discussion, it will come out Saturday. But if you want a little preview, just go over to my Twitter. Or sign up for the newsletter. I'll put it in the newsletter. The newsletter is right here. It's free. It's dailystockpick.substack.com. It is absolutely 100% free. But I'll put this little clip in to tease you. I'm going to tickle you. I'll tickle you from down under with a little feather because it's 1 minute. It is an hour long. So anybody who doesn't listen to me for an hour, listen to this one for an hour. It is an absolute just masterclass on how to use Seeking Alpha, why they do Alpha Picks. I talk a lot about it a lot. There are charts, which is technical trading. And then there's fundamental trading, which is looking at the actual earnings of the company, the products of the company, how they're using their capital dollars, how they compare to other companies in that sector. That is fundamental trading, and that is what Seeking Alpha teaches you. So just like you have office hours with TrendSpider, and Jason, who's a product master at TrendSpider and the charts, how he teaches you how to do stuff, Steve will teach you how to use Seeking Alpha. And it was eye-opening to me, just unbelievably eye-opening. He just takes you through how he likes the PEG ratio, and he explains what the PEG ratio is, and how you value growth. And how, by the way, one of the things that we went over is why Boeing probably isn't a good buy even now. So it doesn't mean that the stock price won't go up. It just means that over the long term, maybe they have more growing pains to go from a fundamental standpoint. And again, the most eye-opening one was how good SMCI is. And by the way, SMCI is up 4% at $934. Anybody that got it yesterday with an 8 handle, Fantastic. You did great. Remember, the support on SMCI is 875. So what happened yesterday? Here's the Qs. And you can see we just opened up. We're up 1% on the Qs. The algorithm got you in at 443. You're trading at 448. We talked about it yesterday. Algorithm got you out, but today there is confirmation, so I'm not trimming. I didn't want to trim. We trimmed sideways since then. It got you out right here on May 15th or March 15th. That's 6 days ago. But we traded sideways and it started to go up. There's no reason to trim at that point. The MACD had already come down. The RSI had already come down. You were seeing a little bit of divergence where it just traded sideways. Now we've got a MACD cross up and we've got an entry on the algorithm. The algorithm makes you 29% versus 23% buy and hold over 24 months. Why you're not getting TrendSpider, I have no idea. If you want TrendSpider, go to my link tree right up here. TrendSpider is $892 for the year. If you're trading with a large enough portfolio, you can absolutely make that money back, no problem. Not only make that money, but on the downturn, on the potential downturn, you could actually save money. Because again, remember, the algorithm is not just about when it gets you in, it's about when you get out. So again, the Qs, where were you? Look at the afternoon candle on this one. This was the big one. The afternoon candle was a 1.22% gain. You opened at 438. You closed at 443. Again, the algorithm got you in at 443, the closing price. So we're at 448.24 right now. We are up 0.99. Again, you don't want to trade at 9:30. You want to trade a little bit before, a little bit after. What happened yesterday? Well, Jerome Powell basically said, hey, we've got 3 probable rate cuts, and they're leaning dovish. The economy's strong. Everything's going well. Powell just kept rates the same. Everything seems to be fine. So that's what happened yesterday. Bull market continues. You want to be in stocks when this is happening. Steve said yesterday, and you'll hear him say it, I don't care about 52-week highs. I don't care about all-time highs. I care about momentum. I care about earnings. I care about valuation. And so he was going over all that stuff. It was just a great one. Biggest movers of the day. If you guys didn't notice, Micron, MU, was up 18%. And you know how you could have played that? I didn't play it. I'm as dumb as everybody else. But you know, here, 2 days ago, I put in the free newsletter. Again, this was free. This isn't paid for. I put in the free newsletter. Micron weekly resistance had back to 2022. It's created that nice round bottom. And if it breaks out, you could see a huge run to 135 to 150. Wait until earnings. Well, earnings came. It was up like 5%. I remember it was up 5%. I wasn't watching it, but I looked at the candles. It was up 5%. It went up 18%. If you just traded with confirmation, you could have gotten this one. So let's take a look at Micron here. Micron is up, let's see. Micron is up 14% right now. Look at that gap. Do you want to trade it? No. Do you want to buy it here? I would say no. I would wait until the afternoon candle for you to see it. But I do think we have 135 in the tank on this one. If we look at Micron, and I'm going to go to Seeking Alpha real quick. We'll take a look. There's Apple, and we'll just take a look at Micron. Because let's take a look at what the quant and everything else says. Quant says hold, and the reason is the valuation, profitability, D+, revisions, A+, momentum, A. Momentum is A. You don't want to go past the momentum. Even though the valuation is an F, take a look at this. And one of the things that Steve pointed out to me was the PEG ratio. And where is the PEG ratio? I guess there it is. Oh, they don't give PEG rate. Didn't give forward guidance. So, not material. I mean, a little bit of a problem. Sales is a D+. We can look at the price to book. It's well below price to book. Forward, even well below. Cash flow, well below, about half of what it is. Dividend yield, they don't really pay a great dividend, but you're not buying Micron for the dividend. Micron, what shocked me is when you go back and you look at a yearly of this, Micron is back to where it traded in 2000. I mean, literally back to where it traded in 2000. This 2000 candle, this is a yearly chart, 2000 candle, the high was 97.50. So it traded back to where it was 2000. You just have this nice dip, you're breaking out. So that's why I think it's got 150 in it. But I did put that in the newsletter, and you can see it. Again, this is a free newsletter, so it's good. Another one of the big movers today, AVGO, Broadcom. This is one that I bought on earnings. I thought it was going to pop. It was setting up nicely. I bought 10 shares of it. I just bought 10 more shares of it this morning at $13.31, about where it's trading right now. The price target was raised to $1,500. I could have gotten it at $13.29. You will probably get an entry in the algorithm on this candle. So when I'm on air tomorrow, AVGO will show up in the cross ups and look at my newsletter. If you go down to the bottom, you'll see scans. That's where entries in my algorithm are. You can look at these charts. If you have any interest in any of these names, go look at the charts and it's entries in there. So AVGO is the other one. It rose on there. Company's announcements of latest artificial intelligence infrastructure offerings at an investor meeting. Biggest stock losers, Li Auto plunged 7% after consensus. They revised stuff. Lufax Holdings, Accenture, you can read all about that. Paramount Global. This is one of the streaming services that I barely ever watched, to be honest with you. It popped. It popped yesterday on news that Apollo Global made an $11 billion offer for the company's film and television studio. The only reason this is popping, the only reason this is going anywhere is because there's interest in buying it. That's it. This will go nowhere other than when there's interest in buying it. It is down 2%. I often say this. Any reaction in the market is an overreaction. If you got the algorithm and you bought it at 10 because the algorithm told you, fantastic. You're up nice 20% right now. Take your profits and run. This 200 days, if it gets up here, it's going to provide significant resistance at 13. You're better off just getting out now. Unless you think that the buy is going to go through. If the buy is going to go through, fantastic. But that's the only reason this is going up is because somebody offered to buy it. Reddit IPO, it priced at $34. Is it worth it? This dude from Seeking Alpha, he's one of the analysts. He says, hey, it's going to $60. I have read. This might be cheap. And it might be cheap just based on some of the value in its AI data. So it could license its AI data, and that's how they will make money. Just understand this company is not making money. If it starts to go, because there was another IPO yesterday, Astera Labs. This one soared 73%. ALAB. Let's see if it's in. I don't think it's going to be in a chart. ALAB. It is here. Let's see. It's not going to run on the algorithm, but it is going to show you that it is up at $74. It is up another 20% today. If for some reason Reddit is able to do something like this, then it's worth trading. Do not think you're going to buy something like this and hold it for a long period of time. My suggestion is absolutely trade it. But Astera Labs soars because the latest chip IPO. It's just a chip company. It's got some big name investors. Morgan Stanley and JP Morgan were the lead underwriters. You can see British architecture firm ARM return to public markets. I mean, this is just anything AI is going nuts. Tesla. This is a strategy in TrendSpider. It is basically enter on a long bullish MACD, exits on a bearish MACD. I talked about it yesterday with Steve Kress about Alpha Picks and how they actually have back tested Alpha Picks for years and years and years, and they know that that their Alpha Pick strategy, the quant strategy that they have, beats the market. And when they say that it beats the market, they actually back tested it. Now, understand, Backtesting and previous history doesn't produce future results, but the best prediction of future results is the past. So if you want to look at the past, you can backtest. That's where TrendSpider comes into play. It is super, super good at this. For instance, this 4-hour algorithm on Apple. Apple, if you bought it and held it for 24 months, 2 years, you're up 4%, 4.5%. If you, for instance, just use the algorithm, you have 28 positions in Apple over 24 months. So you're trading about once a month. You're making 25%. So your average win, 9%. You win 32% of the time. Your average loss, 2%. Again, it plays in this middle ground, and the algorithm gets you out based on moving averages and other indicators. But that's why I really, really like that. But Tesla, we can look at Tesla right here, and the Tesla strategy that TrendSpider is talking about. You don't need TrendSpider for it. If you've got a charting program, just do it. If you don't have a charting, if you do have TrendSpider, they provide you the strategy right down here. You can import it into your own setup. Daily MACD cross up with TrendSpider. It's Tesla, 43 positions over 5 years. Over 5 years, it makes you 1,313%. Buy and hold over 5 years makes you 852%. So you almost double, almost 4.35 risk reward, 25% average return. Well, guess what? On the daily, you're almost crossing up. Here on the daily, you can see my 4-hour algorithm actually gets you in. Here on the daily, look, we're crossing up. So if you don't have TrendSpider, don't think that you need it, but the back testing is super important. My 4-hour algorithm, say you don't want to go back 5 years. Say you just want to look at Tesla over 2 years and you want to look at performance. Well, my algorithm makes you 55% versus losing 45% over 24 months. You have 23 positions, so you don't even trade once a month. Your wins, 43%. Your losses, 57%. Your average win is 17%. Your average loss is 7%. So again, 172 was the buy-in. You're at 177. You have confirmation. The daily is just confirming a little bit later. So we talked a little bit about Apple. Apple is likely to pay a hefty fine, may change their business model as the Department of Justice. My big thing, the Department of Justice hasn't won one of these damn things in a long, long time. What makes me think that they're going to win something here? They're not. They're going to come to some type of settlement, and Apple is probably being pushed more from the European Union than the Americans. So that's all they're doing. I mean, they're just, it's like a bully holding them up. That's all it is. I mean, that's what the Department of Justice is right now. So it's been anticipated. It's priced in the market. I don't expect anything. Dan Ives from Wedbush, he wrote an article about it, and he said, hey, they're just going to pay a hefty fine, and they may change their business model. He didn't change his price target. He didn't change his rating. So he's still got a $250 price target on it. I think it's fine. Want to read more about Micron earnings? You can look at it here. I'll put that article in. Another one that beat yesterday that I said was a good opportunity is KB Homes. KB Homes actually turned out to be really good bet if you bet on it yesterday before earnings, if you didn't even wait till after earnings. If you just bought it yesterday at the open, let's see, it opened up yesterday at 68.22. You're trading at 71. It's homes. We have a shortage of homes here. They beat. If you want to read all about them, you can do that. Chewy was another one that I had mentioned yesterday. They are up I think it's up. Let's see. No, it's down 4%. Chewy adds to gains after investors latch onto margin free cash flow improvement. This was actually up. So this one made a turnaround. Like I said, this one was a trade because it's a significantly volatile stock. I mean, you can see it opened up here. Let's see. It opened up at 1675. Its high was 1728. You're at 1692 right now. Yesterday afternoon, it went all the way up to 1775. So it had some crazy action yesterday. But that one went nuts. Another one, Bitcoin went nuts yesterday. I mean, we can look at Bitcoin here. I can just type in BTC. I think it hit 67,000 again. Let's see where BTC is. BTC, it's not covered, but we'll just look at the price. 66,903. We can look at a 5-day chart of Bitcoin. It's regained. According to some people that I listen to, this one should have some downside. I think April 20th is the halving. But yeah, the miners went crazy yesterday. We talked about that one a little. But Bitcoin, it went a little nuts. Lululemon. This is interesting because tonight we have Lulu, we have Nike, and we have FedEx. I like Lulu. And one of the reasons I like Lulu, take a look at this. This is the PE gap. This is price to earnings. And I like this history because it shows you that in December, the PE was around 64, 65, somewhere in that neighborhood. Today, the PE is 69. And the price return is 59. We've had a pullback on Lulu. And I think that sets up really, really well with some of the earnings that I've seen. And I'll go over some of these earnings because they're pretty positive. Right now, you're not quite up 1%, but look at this top up here at 511. If we just look at a weekly chart of Lululemon, you're still in this upward trend. You're still, even if you were to go back here, let's put in a good trend line here. Even if you were to go back and touch 3 points in just, let's say you touch 3 points from this low, and we just get 3 points in here, you're right on this trend line. So if you're on this trend line, you're going up. You're still going up. I still think it's a good opportunity to get into this one. Look at the earnings, and we can look at these stock charts. You look at ANF. This is Abercrombie and Finch. Look at that one. I mean, that one, just from a standpoint of just straight up, it's going straight up. This is an alpha pick, and this one's up like 1,000% since alpha picks picked it or something. Look at Gap. We can look at Gap. They killed on earnings. Oh, I don't want that. I don't want Gap USD. Gap is GPS. Sorry, GPS. Look at Gap. I'm going to change this right here. GPS. Look at that since their earnings. Straight up. Look at American Eagle since their earnings. I mean, these are, again, this is like Lulu. And Lulu is one of the most expensive clothing brands. But look at these. American Eagle. And yes, teenagers wear this stuff, but the middle-aged soccer moms are wearing Lulu. Guys are wearing Lulu. But look at the two stores in the malls that are packed. It's Lulu and it's Apple stores. And AEO right now, look at that one. And you can look at Guess. Guess reported yesterday. And Guess is up 23% today. So I like Lulu, and it may be cheap based on this chart. It may be cheap. You can look at that one. Nike. I do own Nike. I own like $1,000 worth of Nike. Not much. I bought it like 102, 103 somewhere. Or no, in fact, I bought it 120. I bought up here right before this earnings. It gapped down. Do I expect this gap to start fill? Probably not. There are some analysts who are saying, hey, Nike's coming back. This might be a little bit too low for these earnings, but they're going to have to change a lot. That last earnings was really bad. FedEx would be my number 2 that I would play. And the reason I would play FedEx is not for valuation, not for anything, but you're starting to fill this gap from the last earnings up to 280, from 260 to 280. Are they going to announce that they are in talks with Amazon to replace UPS? That would be huge. Your RSI is already at 72. This one's had quite a run up into this earnings. If we look at this one, we're just going to look at, let me see if I can click on this. I guess I can't. That must be on another timeline, but yeah, this one's run up into this. I don't necessarily like this. Again, for today, I like Lulu. Am I playing Lulu? I don't know. I might play it after earnings, but I do like this particular stock specifically to maybe even get up here to 480. I mean, again, you don't have to hit it out of the park. We're hitting singles on this one. So Lulu, I'll post that chart of the PE. Super micro, time to market is its strongest most. This is an article from yesterday at about 8:55. So it was after I did my podcast. This was interesting. Their speed, they basically, when NVIDIA announced their Blackwell stuff, the second that was announced, SMCI came out and said, hey, we have racks filled with Blackwell, so we can install them starting when they come out. That's pretty much the speed to market that you want with this. And so, they say, hey, it's a good thing. Now, SMCI, I continue to say, if you can get this with an 8 handle, grab it. Grab it. I am not loading up on the 8 handle. I will dollar cost my average way in, but this MACD has gone down here. It's starting to flatten out here. 875, we talked about it, with 875 being a support level. Again, if you're going to buy like 3-4 shares, the difference between 875 and 900 is like $100. It's not that much. It is percentage-wise a decent amount. But this, in my mind, is not something that you necessarily just buy and then the next day you get rid of. If it runs up 100%, you probably want it. I do think we regained this $1,200 price point. And I think we gain it fairly soon. Their earnings are coming up in April, late April, April 30th. So you've seen right here, if we just pull this back, let's pull it back to the last time the algorithm got you in, because the algorithm has you out, by the way, right now. It has you out. But if we pull that back, you're seeing a large amount of volume show up here between 864 and 903. That's the price that you want to buy this in, because that's jutting out as support. That's where everybody's starting to buy. So this gap down here between 822 and 496, you may never get a chance to buy that because there's so many buyers showing up at these levels. So understand that may be the test. That may be it. So take a look at that one. Super micro, time to moat, Barclay says. That's a good one. Okay, let's go to social requests now. Let's see. Gary, do you think NOTV is a long-term stock or a trade? I would like your opinion. This is from Highway on Facebook. NOTV, this is innovative. Let's see. Algorithm has you in at 340. Great trade. If you got into this at 340 Highway, fantastic. You still have confirmation. Let's see NOTV on FinViz, since everybody has access to FinViz. Let's see. It's a healthcare stock. I don't know if it's a buy or hold. I know nothing about healthcare, Highway. Nothing about Highway, or nothing about healthcare, but it's not making money. They're losing $33 million. Cash on hand, they have 85 cents. They don't even have $33 million in the bank. February 9th, Jeffries says hold, $11.50. You're trading at $9.78. Your target price is $15.50. But there's only been one this year, and that was Jeffries. If we look at insiders, are they selling? No, they're buying. In December, they're buying at $3. That's a decent amount from a company with a rather small market cap. Let's see, NOTV. Let's check it out in Seeking Alpha, NOTV. We'll go to, look at that. Strong buy. If you want to listen to Seeking Alpha, it's a strong buy. So Highway, don't blame me if it goes back down to 3, but they like it. The valuation is C-. That valuation's not bad. And again, if you look at the gap, they're not covering the gap forward. So they don't give a lot of guidance. But the forward PE is 9.25. The sector median is 20. So you can look at that. It's ranked number 1 out of 65. So Highway, I would say it's for me, if I were in healthcare, in life science tools and stocks, that might be one that I would want to hold on to, especially if you got in at 3. But again, my thing is, hey, if you've 3 times your money, it's probably something to take some profits on, especially in something as volatile as the healthcare space. Alex, can you look at Newmont, NEM? Very undervalued. Good time to start a long position, ? Thanks. Newmont, this is another one I know nothing about. You guys asked me about these stocks I know nothing about. So take it with a grain of salt. I know nothing about this. Forward PE is $14.90. Cash on hand, $2.63. They're losing $2.4 million. They're expected to go cash positive. Performance year to date down 14% in a very bull market. This is a gold company. Gold has been up. Why is this down? I mean, I don't know. NEM? Let's see. I don't know if it's undervalued, Alex. I have no idea. We'll take a look at this. Quant says hold. Trust the quant. I mean, look at that stock chart. Why? Again, I don't understand why you want the 23 out of 44 in minerals. Guyana gold is the number one, 4.97. Harmony gold. You can check out some of these, but 23. Why do you like Newmont? I mean that makes no sense to me about long term. If it's a long term hold, if it's very undervalued, start a position. I don't know. I mean, let's look at a weekly on this one. Oh, is it a good stock? Well, maybe you thought so in 2022 when it was trading at 83 and it's at 35. Again, sometimes this stuff just means that it's a broken stock. Doesn't mean you time it. Doesn't mean you look at it to try and play it. Just means it's a broken stock. Something like this doesn't give me hope that it's getting back up there. Nobody's holding. Look at this. Look at the volume. So we pulled the volume back here. You pull it back to April 2022. Anybody holding up here? No. I mean, there's some people holding at 63. I don't know why you're holding at 63. I don't know why you're holding at 50. I don't know why you're holding at 43. I mean, what are they? They're hoping that it gets back up there. So, Alex, I'd say no. B333. Will BMR get to $8 again? B333. If I knew that, okay? If I knew for sure that it's getting to $8 again, do you think I would be doing a freaking podcast? I would be loading up my millions of dollars into BMR and saying absolutely 100%. I'm going to make 30% on this thing? I'm loading up the Brinks truck. I have no idea. The odds aren't good. It's not making money. I mean, what makes you think it's ever going to get to $8 again? Is it the income? Is it the future technology? Is it the hype? Because hype, hope and pray is not a strategy to get it back to $8. Volume and trading is. And I don't know if volume and trading is going to take it, because look at the volume on that day. Look at that volume spike. And look at it ever since. It's just crashed. So my guess, no. I don't think it's ever going to get back there. Now, you can see there's a bunch of people holding this. If you pull this back to January where it was trading at $2, guess where the majority of people are holding? Between 7 and 9. So there's some hope that you get back there, but that's just people probably hoping and praying, because there is no fundamental reason for you to be in this. Let's check the quant on BMR. Bear imaging. Let's check the quant. Is it even covered? Let's see. I think it was a strong buy, if I'm not mistaken. Yeah, it's a strong buy in the quant. Valuation B, growth A, profitability D. So it's ranked number 1 out of 190. Do I think it's going to get there? I don't. The quant maybe does. Again, that's part of the game of the stock market, is you've got to understand the stock that you're in. And BMR, I don't know if it's going to get up there. Shep, I'm using Active Trader Pro from Fidelity. Is that a good tool to use? Does it compare to the tools that you use? I used Fidelity Active Trader Pro for technical trading for 2 years. So remember, I really got into technical trading. I understood charts, but I didn't really use charts as much as I do today until really 2000. And in 2000, I buckled down for months and months and months studying charts, understanding Apple, understanding Google, understanding Meta, understanding Tesla, understanding how these charts worked, how they moved, what the moving averages mean, what MACD was, what RSI meant, how successful traders, technical traders, understood how they used all of the Bollinger Bands, all of these volume metrics, how they trade around earnings, how they look at things from a technical standpoint. Active Trader Pro does that. It does it fine. Shep, it just depends. Think of Active Trader Pro as Active Trader Pro. I know the guys on the Tape podcast, they just got Fidelity as one of their sponsors, so they were touting Active Trader Pro. Active Trader Pro is as good as you need it to be. Technical trading, in my mind, is far superior on TrendSpider because you get alerts, because I can do custom time frames, because I can do back testing. There's no back testing in Active Trader Pro. There is no custom time frames in Active Trader Pro. There is a limit of what you can put on the screen in Active Trader Pro. So do I like it? No. But remember, I'm using Macs. So Active Trader Pro is built on a Windows platform. So I was not optimizing it either. But do I think that you need a TrendSpider instead of Active Trader Pro? No. If Active Trader Pro is providing you the tools that you need, then it's good enough. I used it for years, up until I think I started using it in, I think about 2018 is when I started using Active Trader Pro. And then I moved over to TrendSpider in 2020. So for a couple of years, I used Active Trader Pro by itself with Trade Armor. I loved it. It was slow as fuck, but I liked it. And it was because I loaded too much crap into it. That's what it was. There's a great setting in down in the bottom right-hand corner of Active Trader Pro, tools in use. And so in the bottom right, if you are getting a slow performance, Shep, just know that tools in use works. And with Fidelity, when you use Active Trader Pro, go and get Active Trader Pro training. That's the best thing that you can do, Shep, because Active Trader Pro, Fidelity has custom workshops. And if you go to news and research, I think it's news and research here, and you go to learn, news and research, and then learn. This is where Fidelity blows everybody away. And you can take a look at upcoming events. You can figure out get started. You can go to events here and say on-demand webinars. I think they have Active Trader Pro training in here. But Fidelity is phenomenal. So Shep, I can't tell you enough good things about Fidelity. I've been such a fan. This is how I used that Learn tab. Just go there and learn how to do stuff. It's great. And they have a morning session and stuff. I mean, they really do a good job. Sam wants me to discuss CRSP. I think this is CRISPR. This is generic therapeutics. I think it's based on DNA. So CRISPR is something that fills in the DNA. Typically, I think all biomedical companies use it or something. Algorithm has you out. This is one that Kathy Woods used to be huge on. I don't know if she is still as big on it as she was. CRSP, not Casper. CRSP, there it is. It's a strong buy in the quant. Buy from Wall Street, hold from Seeking Alpha Analyst. The valuation is a D. But when you go over here and you look at the PEG ratio, where's the PEG? PEG ratio, yeah, it's not guided. So it's hard to say whether I like it or not. The quant says strong buy. Janux is the number one biomedical. But CRISPR is, where is CRISPR? Let's see. CRISPR is, we'll go back here. I think it's 11. 36 out of 512. It's a healthcare stock. I don't know anything about it, Sam. But I do know they have a good solid company. Now, I don't think that their earnings are very good, and it's kind of overvalued, if I remember correctly. Yeah, they're losing money. This was a Kathy Wood stock. Year to date, it's up 20%. Over 1 year, you're up 69%. They had some problems, and I think Kathy Woods dumped this stock, to be honest with you. Initiated February 2024. Wolf, no price target, but the target price is 85. It's trading at 75. Take it with a grain of salt because most of those 85s are back in 2023. So nobody, this TD Cowen in December, they put it down to 30, and it's trading at 75. Back in December, this was trading at 60, around $70, and they put it down to 30. So it's the valuation. So decide if you like it. Taylor Springer, TRUG. I am scared I may have made a mistake. I think, is this True Golf? True Golf Holdings. I don't know if you made a mistake, but this is a super small company. Electronic gaming and multimedia, they're losing $610,000. They have no sales. So they're not making a product, it doesn't look like. I would say you made a mistake, but if I remember correctly, TRUG, I think it depends on the time that you bought. If you bought yesterday or the day before at $1.17 and you're up, up, and maybe you bought up here. And if you bought up here at $8, you're probably best off getting out. I don't know anything about this company. I don't know anything about it. It's super small, and there's no earnings. This is like DWAC. There's no earnings. There's nothing to talk about. Volume 436,000 shares, but 1 year you're down 82%. Year to date you're down 84%, but in 5 days you're up 37%. So Taylor, I think it depends on when you bought. If you bought 5 days ago and you're up 40%, high five. But the fact that you think you made a mistake, I think you're probably in this 80% loss. Get out while you can. I don't know anything about it. What led you into buying this other than hype, but what led you into buying this? This to me identifies as a SPAC, trading at about $10. And a SPAC is always a mistake. It's always a mistake. There's no ifs, ands, or buts. SPAC is 100% a mistake. So we can look at this. Let's see, pre-market movers. It doesn't give us any kind of thing. But True Golf, it's just, if you got into this early, you made a mistake. But, again, you have to find out why you got into it. If you know anything about it, if not, get the hell out, because you're seeing a blip. You're up 40% in 5 days. Why wouldn't you get out? But again, I don't know anything about it. Pozo Packer, GOEV. I think this is Canoe, if I'm not mistaken. Yes, Canoe. This is an EV maker. EVs have been out of favor. Strong sell from the quant. I don't know why you would get into this one. It's a company that I have no idea. I don't know why you would get into this Pozo. Tell me why this one. You would get into this one versus Tesla. As broken as Tesla is, they have cars, they have earnings, they have production, they have multiple factories. Go into Ford, go into GM. Why would you pick this one? That's the question I would have to you, is why are you picking this one? And if you can give me some fundamental reasons why you're picking this one, because it's clear from a valuation standpoint, from a growth standpoint, from a momentum standpoint, from a profitability standpoint, maybe you're saying, hey, CapEx to sales, maybe that's a really good stat. Everything else on this profitability is an F. So momentum, F. It's consumer discretionary, 30 out of 32. It's one of the bottom ones. Toyota's the number one. Subaru, General Motors, Volkswagen, Honda, Li Auto. You could have bought any of these. What made you buy GOEV? Or if you didn't buy it, I would say do not buy it. Pick any of these other 32 companies. Anything above there, and I think you'll do better. But, again, Canoe, I love their designs. I love their thought process. Just making cars is a tough business. Now, if you bought here in the algorithm at $1.93, that's a fantastic buy because you're up 100% in 6 days. 100% in 6 days. Again, it matters timing. But this reverse split, one stock for every 23, that's never good. That's the reason companies remain. That's just, hey, we're going to go bankrupt and we're going to be delisted and we can't issue more stocks unless we do a reverse split. And when we do a reverse split, we're going to devalue the consumer base. Look at this volume. I mean, this is what drives the stock up, that volume pop, and then you've got something in here. I don't know what would drive me. I don't know what the news is, but in my mind, this is 100% a trade. It is not an own. So absolutely, manufacturing facility gets foreign trade zone status, shares rise. I mean, great. It got, gets foreign trade zone status. That means that I think they save on importing. After the U.S. Department of Commerce approved Oklahoma facility as a foreign trade zone. Designated will allow the elimination of all custom duties on vehicles sold to customers overseas for deferral of custom duties on imported parts. Great. Doesn't mean they made a vehicle. Doesn't mean they sold a bunch of vehicles. Just means that it's going to be cheaper for them to export these to other countries. So I can't tell you enough about, hey, you've got to understand that what you're investing in. Do not trade on hype. You can trade on hype. I shouldn't say that. Do not invest on hype. Trade on hype all you want. Okay, scans. We are in a bull market. There is so many. Go to my newsletter and see the list of scans because there are a ton of them. Way too many to go over. I will go over levered ETF. TQQQ, we had QQQ. I told you at the beginning, QQQ gave us an entry. Well, TQQQ gave you an entry too, 61.71. You're trading at 63.38. You are up 2% on this one. So it's again, if you want to trade TQQQ, it is a daily triple levered ETF. My algorithm over 2 years, 24 months, you make 24% on TQQQ. If you just bought and held TQQQ over 24 months, you made 7%. This one gets you in 24 times. So you trade once a month. Average win 17%. This could be one of the 17% winners. Who knows? It could be one of the average loss of 9%. You win 43% of the time. So 4 out of 10 times, this is on average 17% winner. It is a daily triple levered, so it is not something you want to hold on for very long. We can look at FAS. This is the financial bull. This one has just been on a tear, and it got you in at 84. Got another leg up. FAS, SPXL. This is the triple levered bull on the S&P. Another leg up. 106 hasn't got you out yet. You're at 134. But again, you want to try and trade these on a daily basis. It's not something you want to look at from a long-term basis. This is Comb. This is what is it? Granite Shares Bloomberg Commodity Broad Segment. I mean, look at that from 1908 to 1981. It's not a great one on the. But it got another leg up as far as a crossover. UPRO, this is the pro shares again, S&P 500. Everything is pointing to a bull market. Even NAIL, NAIL. This is the home builders. This is the Direxon Daily home builders suppliers. I think it's 3 times levered. NAIL, 137. 137 is the buy. You're trading at 143. Low-cost ETFs got you in. There are some important ones to say on the spider sectors. XLY, this is the consumer discretionary. This is in the core portfolio. This includes Tesla. This is what I'm in because I didn't want to be in Tesla, so I bought XLY. And if you want to see what's in XLY, go over to Seeking Alpha, and you can go to XLY, and it will give you a quant score on it. It will tell you whether it's a strong buy, whether it's a hold. It's a hold right now, and the risk is C-. And if we go over here to the holdings, we can look, and it's Amazon, 22%, Tesla, 12%. So 44% of this is between 2 companies. They only hold 54 holdings. Your number 3 is the Home Depot. Great companies to hold. XLY, solid on that one. XLF, the financials. This one got a cross up. Again, we talked about FAS, the triple levered one. XLF gets a cross up here. 38 is where the algorithm got you in. My algorithm makes you 29% on this one. over 24 months. You trade 20 positions, so not even once a month. You know, if you bought this 2 years ago, you're only up 4%. My algorithm gets you in and out. Average win 6%. You win 40% of the time. XLF, another sector, XLG. This is the top 50 S&P. This is the Mag 7, but just 50 companies. This one, algorithm makes you 35%. You know what you make over 2 years? 20% in this one. Again, the concentration of those top 50, if we go over here to Seeking Alpha and we look at what's in XLG, you can see heavy weighted on technology, 41%. Microsoft, Apple, NVDA, Amazon, Meta, they all make up large portions of this thing. Even Berkshire is in here. So XLG, solid one. And finally, XLI. XLI is the final sector that got a cross up. So here you go. XLI is up 0.83%. Got you in at 112. You're at 125. If you go over here to Seeking Alpha and we see what's in XLI, you'll see breakdown industrials 93%. General Electric, Caterpillar, Uber, Union Pacific, Honeywell, RTX. I do own Caterpillar. I own Uber. My dad owns Union Pacific. So I own a little bit of Boeing. That's where this one's getting pulled down, but that's only 2%. Deere has been doing great. United Parcel, fine. RTX has been just, again, the industrial sector has been doing great. So if you have any questions, you can hit me up on the LinkedIn. Remember, TrendSpider is the first link. Seeking Alpha Premium, second link. Alpha Picks, save $50 on both of those. When you subscribe to them, I will have the Steve Kress interview. Again, go look at that at that clip. He's just a master at it. So if you have any questions, hit me up. Join Webull. And again, the newsletter. The newsletter is the number one thing you can do. It's free. And remember, it's broken up into sections, so you don't need to listen to me for an hour a day. Usually at the top, I'll include some charts of stocks that I'm watching for the day. I'll include some sale links just because, again, I'm an affiliate of these places, so I need to make a living. Support me by signing up for I sell tools. I don't sell a course. I sell tools. And the tools that I sell are for you to actually make money. Not for me to get you money, but for you to make money. Find opportunities. Let me know what you find because, again, we want to share them with the community. But then I give the pod notes. And the pod notes are actually in order of how I go over them. There might be a little bit more in the newsletter than what I go over. But again, if you want to see these, you can look at them. And then at the bottom, I include your social requests and any comments that I have on some of the social requests. But the biggest one that you can do is the scans. And if I have scans that are super positive and I really want you to look at, I'll include the charts for those. So if you have any questions, hit me up. Sign up for the newsletter. I will talk to you guys tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock day trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.